Hey, what's up, guys? Austin Angler here, and I want to go over some of the things that happened today with Ethereum, especially my short trade, which was right on the money from last night at 391 that I was telling you about. Now, I did get out of that, unfortunately. I thought we were going to go higher into Asia markets opening, but it didn't. And then I went short again today, and twice actually, and made some good money, but wasn't able to get out on a couple of the downswings like I wish I would have. I would have saved myself a lot of money. Shoulda, woulda, coulda though. So I did get about $30 in value, trading. So that was good, especially since we had a little blip crash there, and I was out running some errands and couldn't close it out because my data is full on my coin or on my phone. So let's go ahead and talk about why I believe we crashed here today and why Ethereum crashed, why Bitcoin crashed, and all the currencies I believe crashed today. And the one thing that stood out to me that nobody else is going to talk about was the Federal Reserve raising interest rates. Let me go back on some history. In college, I have a degree in finance, and I ran some algorithms basically on currencies, gold, and the stock market and interest rates. When the Federal Reserve raises interest rates over the last like 50 years, I believe is how long I ran that history. When the Federal Reserve raises interest rates, the value of the dollar, the US dollar, goes up. And that is why I think we had a pullback in the cryptocurrency market. Especially today, because as the dollar increases, people feel like their Bitcoin holdings are going to decrease. Even though their increase wasn't that much, it was from 1 to 1.25%. That is still a 25% increase in the interest rates. And so in turn, the US dollar did rise up. We saw gold go down, silver go down, and also Bitcoin as well, and Ethereum followed. Bitcoin is still the largest of the cryptocurrencies, so that is why Ethereum follows suit. Ethereum, I still believe, is the strongest cryptocurrency for the future, as I believe Bitcoin is, again, a value placeholder, and Ethereum is the future with the models of all these applications being built off of Ethereum. So we're still looking at a lot of buyers. It did pull back, to the moving averages as well. I want to talk about new investors too. Let me talk to you guys as well. New investors should wait till an opportunity like this happens. We've seen it a couple times in the history, of the charts. You'll see the moving averages, following up on this huge upswing, and then all of a sudden these cryptocurrencies take a big pullback, hit the moving averages, stay there for maybe 5 minutes. That's about all it did today, twice, and then it bounces up off of those. The reason is because there still is, even though this is new, there is still computer programs that are trading, these cryptocurrencies. So these computer programs, algorithms, are ran to basically trade off of moving averages, predict the future of moving averages. So it might go through a moving average but rebound off it, or it might just go right down to a moving average and rebound off of it. Earlier on today, I was short because I looked at the 1 hour, the 6 hour, and the daily charts to see, what over a shorter term, not daily, but maybe over a couple days, how this pullback would maybe be affected, especially after Monday's magical drop, which I still believe was fault by Coinbase. Actually, one of my subscribers on my StockTwits, Super Hedge Man, did send me a note that says that somebody was looking into investigating the facts on the outage from GDAX and Coinbase from Monday. So I was right on the money with that. It's obvious, you can tell when something like that happens. Just like with silver, how that's so manipulated by derivatives. Another thing that someone talked to me about today was, is this a, they said bear trap, but is this a bull trap, would be the proper terminology for this. It's not nearly large enough, I don't believe, to be a bull trap. You know, we saw the dot-com bubble. That was a bull trap. That is a textbook bull trap where things are soaring and multiple things are soaring, thousands of percents, thousands, billions and billions of dollars, up to trillions of dollars in valuations, you know, in a short period of time. Which, let's see here, which brings me to the next point. I want to talk about the future of these cryptocurrencies and why not to be scared right now. So we have Bitcoin at 41 billion, Ethereum at 33 billion, and Ripple at 10 billion. That's the market capitalization right now. That is still tiny compared to the world's overall assets. I'm going to list off a couple other ones so you can just see how tiny these still are and why they're not in a bubble yet. Apple, just Apple alone is at 616 billion, closely followed by Microsoft, Google, and a couple more. There's three guys with $80 billion in wealth. Bill Gates, Warren Buffett, and Carlos Slim. And so we're not even there yet. We're not even worth as much as one of the richest guys in the world. So we have plenty of room to grow. These pullbacks are just a little bit of profit taking with some scared sellers selling down the price. Let's talk about some more of those market capitalizations around the world, because I think that's very important going forward here in a long-term view, especially if you're buying, you're new, you're not putting too much into it, hoping to get, maybe turn 1,000 into 10,000, 10,000 into 100,000. I think that is very doable in the future. The time frame on that, I'm not sure. It depends on how fast we go up. It depends on how many people take profits. It depends on how many people are scared sellers. But I do believe we get there, probably quicker than anyone's going to realize, because of the use of the internet and technology and how everything is at our fingertips right now. Let's get back to that market capitalization around the world. So world coins and banknotes are $5 trillion worth. Commercial real estate, $7 trillion. Gold, $8 trillion. All stock markets, $70 trillion. All derivatives created by banks, $630 trillion. And that can even go up to I believe, somewhere in the quadrillion dollars. And this is all notes from the CIA and their fact sheets. So we look at cryptocurrencies at probably 100 billion. Let's say they get to 1 trillion. That's putting a zero on the end of all their prices right now. That's turning your 10,000 into 100,000, your 1,000 into 10,000, and that's very tiny still compared to the whole entire world's assets out there. If we took 1% of these assets right here, we'd be over $1 trillion. We would be somewhere, let's say, $7 trillion, maybe around the value of gold for all cryptocurrencies. So that's multiplying these current prices by 70, and that's only 1% of all the values of the assets together if we took that and put it into cryptocurrencies. So I hope you guys stay strong and keep buying on the dips. If you're new, put a limit order in at the moving averages or right above it, and be confident with your buys. And like me, I'm going to short daily, I'm going to buy daily, but overall I'm going to make sure that I'm not missing the next move up, because that's the important thing, not to miss the moves up. You might get a little bit of money like I did, about $30 worth on the shorts today. That's great. That allows me to roll it in, those profits, into my long position, giving me about 3 or 4 more coins. And I try to do that daily or every week. That way, my stockpile of coins grows. I'd like to have 100 coins by the end of this year, just from me trading. Started out with 12, now I'm at 29. and I can be at 56 with margin as well. And that's how I make my money. So I hope you guys enjoyed watching this video. I'll try to keep posting and keep you up to date. Remember to subscribe below, and that way you get my videos daily whenever I post them. And also follow me on StockTwits and under Super Hedgeman. That way you get my daily updates all day. When I'm selling, when I'm buying, I'll try to update you as much as I possibly can. Thanks for watching, guys, and we'll catch you later.